Welcome to the Explainer. Look, we need to confront a pretty uncomfortable truth in the financial industry today. Right now, most Forex brokers are absolutely obsessed with acquiring new traders. I mean, they're tracking acquisition costs down to the penny. But here's the thing. While they're popping champagne over new signups, they are quietly bleeding their high-value clientele out the back door. So let's unpack exactly why this is happening, and more importantly, how we can actually stop it. Let's look at this setup. The industry standard playbook has always told us that bonuses attract, right? Flashy deposit bonuses, crazy high leverage, aggressive affiliate campaigns. And hey, no doubt, these tactics absolutely work to get that initial deposit. But the reality that completely shatters this illusion is it trust retains. Sure, a bonus buys a trader's attention for a week, but those high-value traders, the ones moving serious volume, they stick around because they genuinely trust you. Without that foundational trust, your shiny acquisition strategy, it's basically just a revolving door. This really forces us to completely redefine how we view churn. Churn is not this sudden, spontaneous event. Traders don't just wake up one random morning out of nowhere and decide to pack up all their capital and bounce. No, trust breaks way before traders leave. It's this slow, silent erosion. By the time a trader actually clicks that withdrawal button and closes their account, man, that relationship has usually been decaying for weeks, maybe even months. The departure is literally just the final symptom of a much deeper disease. So where exactly does this trust fracture? Keep in mind, high-value traders are intensely perceptive. They notice absolutely everything. Take delayed withdrawals. That's the ultimate cardinal sin. If they can't get their money out smoothly, panic sets in instantly. Or what about unclear communication and weak support? You give them a vague response 3 days late, and that is a massive hit to your credibility. And if they go looking for visible authority but only find poor reputation signals lingering online, yeah, their internal alarms are definitely ringing. Every single one of these moments is a tiny microfracture in your relationship with that client. And those microfractures, they escalate into a totally predictable timeline of failure. It always ticks off with step one bad experience. Maybe it's just a minor slippage issue or a super slow customer service ticket. But that leads right into step 2, doubt. The trader starts wondering, hey, are my funds actually safe here? Left unrectified, that doubt snowballs into step 3, repeated doubt. Another withdrawal delay, another ignored email. And finally, that snowball just crashes right into step 4, churn. They leave. And the worst part, they aren't coming back. Think about this. Retention is not just a CRM problem. It's a credibility problem. So many brokers are out here thinking they can just fix their churn rate by tweaking their CRM software. Firing off an automated birthday email or a little, "we miss you" push notification. But guys, you cannot fix a credibility deficit with a software patch. If a trader fundamentally doesn't believe in your brand's integrity, absolutely no amount of targeted email campaigns will stop them from walking away. Let's break down the actual due diligence that serious traders are running. They are not just clicking an ad and depositing blindly. First up, they check the search results for your Google presence and authority. Do you even exist outside of your own website? Next, they look at reviews, specifically your withdrawal reputation. They need to know if other people actually got their money out without a hassle. Finally, media presence. Are you visible in respected financial outlets? If a trader runs through this checklist and comes up empty, there is no way they're going to feel safe or confident. The absolutely crucial takeaway here is this: confidence equals retention. It is a direct one-to-one correlation. High-value traders are only going to park their money where they feel safe, respected, informed, and fundamentally confident in the institution holding those funds. If you engineer confidence, you engineer retention. It is honestly as simple and as profoundly difficult as that. I want this next point to really sink in. If your broker feels risky, serious traders reduce exposure. Notice that word, feels. Risk isn't always about actual, literal financial insolvency. It's so often about perceived risk. Remember, serious traders are masters of risk management. If your brand gives off even a tiny hint of instability, their hardwired response is to protect their capital immediately. They'll quietly withdraw funds, scale way back on lot sizes, and shift over to a competitor who just feels safer, all long before you even realize their trading volume has flatlined. Which brings us to the big strategic pivot. This is where we stop playing defense and start playing offense. PR changes the game. Public relations isn't just about fluff or vanity metrics. It is the strategic trust layer that serves as the actual, tangible fix to this massive credibility gap. It's exactly how you control the narrative before a trader's doubt even gets the chance to form in the first place. Let's look at how this functions practically. PR builds your public credibility. It ensures that when traders actually search for you, they're finding authoritative articles, not just a bunch of random forum complaints, which obviously strengthens your search visibility. It elevates your overall brand perception and creates these massive authority signals, like getting your executives quoted in major financial media. Most importantly, though, it reduces that inherent fear around unknown brands. It basically surrounds your brokerage with this invisible, bulletproof layer of trust. Compare the usual chaotic methods of this industry with true authority. You don't retain serious traders with noise, you retain them with confidence. Noise is just bombarding their inbox with endless deposit bonus offers and desperate, flashy marketing. Serious traders, they tune that out in a heartbeat. What they actually want is the quiet, undeniable confidence of a highly respected broker. They want real substance, not just shouting. So here's the exact pipeline for how a real PR strategy translates into keeping your high-value traders. Step 1 is visibility. You've got to be seen in the right publications. And that naturally leads right into Step 2, authority. When respected platforms feature you, you are essentially borrowing their credibility. That fosters Step 3, trust, right in the mind of the trader as they do their due diligence. And logically, that trust results in Step 4, retention. It's a totally logical, step-by-step sequence that actively protects your bottom line. Okay, let's completely break out of traditional industry thinking for a second. Deposits are not the finish line. Way too many brokerage teams ring a bell the second a massive deposit clears, acting like the job is totally done. Listen, the job has just started. Getting the money onto the platform is literally just the prerequisite. If you treat the deposit as the finish line, you are practically guaranteeing you'll neglect that trader, which triggers that exact vicious cycle of doubt and churn we just talked about. We really need to reframe our idea of long-term success. Retention builds real growth. The brokers who are going to absolutely dominate the market 10 years from now aren't just the ones who master acquisition. They're the ones mastering retention, so their growth actually compounds. Think about it. If you aren't constantly scrambling to replace churned clients just to stay flat, every single new acquisition actually adds to your total volume. That compounding effect, that is the absolute holy grail of brokerage growth. So the imperative here is pretty clear. You have to build a broker brand that traders trust for the long haul. You really cannot afford to ignore this credibility gap any longer. You need to explore PR strategies today, build out that essential trust layer, elevate your visibility, and just watch how it fundamentally transforms your retention metrics. It's time to stop relying entirely on short-term bonuses and start seriously investing in your reputation. I'm going to leave you with this thought. Take a hard look at your current marketing budget. Honestly, how much is being spent making noise, and how much is actually spent building confidence? Because if your dollars are heavily skewed toward temporary acquisition, it's probably time for a major change. If you agree that retention matters way more than just getting a trader in the door for a single week, drop the word trust in the comments. And be sure to subscribe so you don't miss our upcoming explainers on real, sustainable Forex growth. Thanks so much for joining me for this explainer, and I'll see you in the next one.